identifying different classifications of costs. So let me back up for just a second. On Tuesday, I talked about how we were going to use the data that we were collecting to make decisions. So we have to identify what that data might be. So today we're going to talk about what kind of data a manufacturing firm, for example, might keep track of or might accumulate. And the reason we use a manufacturing firm as our example is just because it's just got the most relevance when it comes to these costs. That doesn't mean that these things can't be applied to other industries. I think I stressed that the other day. So this would be the same kind of process and concept for a service business, healthcare industry, really any industry you could apply this to. It's just easiest to learn it when we use manufacturing. Before we can actually use data to make decisions, we have to understand that data. Okay, so some of the types of different classifications that we're looking at, you'll see up here, financial reporting. Well, we did that in Accounting 101, right? There was a certain way we accumulated our data. In other words, we recorded it a certain way according to, who remembers what the rules were called? Anyone? I know it's early, but you know. What were the rules that we used as guidelines? Anybody remember? Begins with a G. Oh, okay. Generally accepted accounting principles. You guys remember that? GAAP. Yes, GAAP. So we use GAAP to aid us in recording and reporting. In other words, that was a set of rules and guidelines that we use. Okay, so we're not going to be doing any financial reporting in this class, though. Remember, financial accounting, we were preparing reports for external users. But now this is managerial accounting, so we're doing things for people inside the company. Okay, so these other three kind of are what we're going to be looking at. We're going to be looking at predicting how costs behave. Now that might sound a little silly to you. How do we, or what does that mean, how costs behave? So let me give you an example. Let's take gasoline expense, for example. How would your gasoline expense or cost behave if all of a sudden you had to drive an extra 200 miles a week in your car? It would go up, right? That's really what we're talking about. When we're talking about how costs behave, we're really talking about whether they increase or decrease as a result of something affecting that cost, okay? So, for example, I drive about 400 miles a week. I don't really have a lot of control over that if I want to have a job and get to work every day, right? But there are certain costs that you can control. So part of our goal is going to be figuring out which costs we can control and what actually makes those go up, those costs increase or decrease, which costs we can't control, and what actually perhaps affects those as well. Sometimes we have control, sometimes we don't have control. Like your tuition, for example. Do you have control over how much tuition increases annually? You don't, right? There's nothing you could do, right, to lower the tuition. Now, you might be able to lower your personal bill, right, with scholarships and things like that, but I'm talking about the rate of tuition. You can't really do anything to change that, right, or affect that. Your personal spending, could you or do you have control over your personal spending? Shake your head, yes. Yes, you do have control over your personal spending, right? Self-control has a lot to do with personal spending, right? So we have to decide for our businesses, doesn't matter what kind of business it is, how the costs that business incurs, how those costs change, increase or decrease, and whether the company has control over those or not. Because you don't want to spend a whole lot of time on something you don't have control over, right? It's kind of pointless. Okay. So we use that data, we use that information, and then we assign cost to objects. So for example, if I'm a manufacturer of tables, like the one you're sitting at, okay? If I make tables, right? I want to figure out all of the costs that go into making that table. The table would be my object, my cost object, okay? And I would determine all of the costs associated with making that table, and then I would try to figure out, of those costs associated with making the table, which ones do I have some control over and which ones don't I have control over. And that information is going to help me make decisions about the products, my table for example, or the services that I offer. Because what is every business owner's goal or bottom line?
Make money.
Make money, exactly. And that's really what we're talking about here. We can only do that, we can only increase our profits or increase our bottom line one of two ways, right? We can either sell more, right? Or we can lower our costs. And sometimes we can't sell more. So we have to maybe focus on lowering our costs, but we can't control every cost. And that's the first thing we have to figure out. We have to figure out which of those costs we can control. So today that's going to be our focus. What costs can we control? What costs can't we control? So we're going to be talking about cost classifications. And after I get through this, I kind of put like a little flow chart up on the board. It's pretty simple, but it helps you with this homework assignments and making these determinations. So we have a couple of terms here that you're going to hear me using a lot. We have something called direct costs. We have something called indirect costs. And I'm actually probably most likely going to come back to this, but what I want you to think of is a particular cost object. In this particular example, you're going to see it's going to be an automobile or a car. Okay, we're going to look at a car as our cost object. And what we're focusing on is, what are all the costs associated with manufacturing a car? Which ones can we control? Which ones can't we control as the manufacturer of that car? We're going to have classifications as broad as something called direct costs and indirect costs. Okay, but I'm going to come back to that here in a little bit. The basic definition of a direct cost is a cost that can be easily and conveniently assigned to a product or a service. So, this table, for example, I really have no idea, how to make a table, but I can look at this table and pretty much figure out, at least generally talk about the materials that probably went into making this table. Those are what we call direct costs, okay? Something that's indirect can't be easily and conveniently traced to a unit of product. And we're going to really kind of break this down even some more, okay? I'll talk about common costs later. Don't worry about those right now. Like I said, I'm going to put a little flow chart up on the board for you after we get through most of this. Okay, so here's our car, okay? And so what we're going to be talking about in this class is manufacturing costs. Really, versus non-manufacturing costs. And you're already familiar with quite a few non-manufacturing costs. So let's briefly back up to something we talked about, and it's something hopefully that someone mentioned to you in Accounting 101, if it wasn't me. But in Accounting 101, we talked about service businesses, and actually, that was the first kind of business that we learned how to record transactions for, because it was simple, okay? A service business, you provide a service, you provide your time, and the revenue that was earned was fees earned. You guys remember that, fees earned? Okay. So we had service business, and our revenue was fees earned, right? Then we moved down a little bit later in the semester, or later in the textbook, and I know you covered this even if you didn't have me. So you get to chapters 4 or 5, somewhere around there, and you start to talk about merchandising businesses. And that's just a fancy word for a retailer, right? You go to the store and you buy something. You guys remember that? And merchandising businesses, we call that revenue account sales, right? But the main difference between these two, right, we had inventory here as well. So that complicated our transactions a little bit more, because now we had to account for the inventory, right? That was a part of the day-to-day transactions. In service business, we don't have inventory, so we don't have to keep track of it, right? So we had inventory then to keep track of. So that complicated our transactions a little bit more. And then the one thing we didn't talk about, which is even more complex in terms of accounting, is the manufacturing business. Manufacturing. And manufacturing businesses are going to make their own products to sell to their customers. Up here, where does the merchandiser get its inventory? Well, from a supplier, right? Or a vendor. Already made. The product is already made, right? So if I decide I want to sell shoes, then I'm going to contact multiple vendors, right? Different manufacturers of shoes that I want to have in my store, and I'm going to buy shoes already made. Yes? I'm not going to make them myself. But there are lots of companies who do what? They make their own products. So that complicates the accounting a little bit more, because now we have to make our own product, right? And so that making of the product involves a manufacturing process that we haven't discussed yet. It also involves costs that we haven't talked about yet. Okay? So you'll see we have 3 classifications of manufacturing costs. And I will say this all semester long. Periodically I'm going to say, what are the 3 main manufacturing costs that companies incur when they make their own products? And you're going to say direct materials, direct labor, and manufacturing overhead, even though you might not know what any of those things are. So that's obviously going to fall under my little category here of manufacturing costs. I'm going to actually break manufacturing costs down into 2 subcategories. Words I've already mentioned, direct costs and indirect costs. Okay, you're going to see how these are all going to fit together here, all these terms we're talking about. These 3 main manufacturing costs fit into these 2 subcategories. Okay? Now, really simple is direct materials and direct labor both have the word direct in them, right? So where do you suppose those go under? Direct costs, yes, okay. So we have direct materials and we have direct labor. You'll see why this is a little bit helpful later on, have it all looking like this. Indirect costs, the only thing I have left is what? I have this manufacturing overhead, which we'll talk more about here momentarily. Perhaps you've heard people say, oh, I've got lots of overhead, or my overhead is so on and so forth. Okay, so what exactly does that mean when people refer to their overhead? I'm going to define that here for you. So there's the product, and I wish it said this, but this is my cost object here. So this car, in this example, is a cost object. Okay? A service can be a cost object. If you cut grass, right, cutting grass is the cost object, because what you want to try to determine is what are your costs associated with providing that service? What are your costs associated with providing that product? That's the only way you can figure out if you're going to make a profit or not, right? That's the only way you're going to figure out which costs you might be able to reduce, which costs you don't have any control over. All right, so questions so far? All right, so just some definitions here. Direct materials are raw materials that become an integral part of the product and that can be conveniently traced directly to it. Now they use a radio installed in a car. I can think of a lot of other things. How about the wheels, right? The tires, the wheels, the actual body of the car. Anything that you can really see and touch on the car, okay, that would be obvious to you, that would be easily traceable, is a direct material. It becomes the word integral, right, means a large component of, an important component of that finished product. All right, so think of it, you can substitute the word main if you want to, a main part of the product. Sometimes that helps to sort of clarify what that means. So that's a direct material. Direct labor would be the labor cost of an individual who actually works on the product that you're manufacturing. We sometimes call it touch labor, and that's to help distinguish between direct labor and indirect labor, which I haven't talked about yet. People who actually work or touch the product. So for example, if I was the manufacturer of these tables and they were manually assembled, and I was the person who manually assembled them, put them together, my wages, right, would be a direct cost associated with this table. Does that make sense? Okay. In an automobile manufacturing situation, the assembly line workers, because they're literally assembling the automobile as it moves down that line, right? Some people are putting on the doors, some people are putting on the wheels. Okay, so manufacturing overhead. Here's the nice thing. When you have a list of costs, and this is what we're going to actually end up doing, we're going to look at a list of costs, and we're going to have to decide what classification those costs fit into. Okay, before we can make any decisions, we have to understand our costs. We have to understand how they behave. When I say behave, what do I mean? Whether they do what or what? Increase or decrease, right? Okay, based on certain things. So we have to be able to classify costs associated with our cost object into these appropriate categories before we can make any decisions. So we do that first, all right? If it's not a direct material, it's pretty easy to determine. And it's not direct labor. This is our catch-all category. If it's not one of these two things, it has to go here. If it's associated with making the product, okay, it has to go here. And we call that manufacturing overhead. Now, manufacturing overhead has a lot of different types of costs that fall into this category. Indirect materials is one example. See, so materials can be direct, they can also be indirect. And indirect labor is another example. There are more, I'll get to those here in a minute. So it says indirect materials, materials used to support the production process. Examples might include lubricants, cleaning supplies used in the automobile assembly plant. See, those things are necessary to make your product, but they don't become a finished part of your product. Does that make sense? They're necessary, but they don't become a finished part of your product. For example, these tables too, let me give you another example. There may be some glue used in some component or some part of this manufacturing or assembling of this table. Okay, something like glue, I would not try to figure out exactly how much glue I use in each table. That would take a long time and it would kind of be silly, waste of time. Glue's not that expensive. So I would probably call glue an indirect material. Even though it does become a finished part of the product, it's not easy to allocate or to determine how much glue actually goes into each table. Okay? Examples of wages that are not direct, indirect wages, indirect labor wages. Those people who are not necessarily touching the product or actually providing the service, but are supporting the organization. So they give you an example, maintenance workers, janitorial staff, security guards, even managers who are just walking around making sure people on the assembly line are doing their job correctly. Those people would be indirect labor as well. Okay? Now, the other thing I need you to keep in mind while we're doing this is every business is different. These classifications are for our internal benefit only. We're not sharing this information with people outside of our company. People outside of our company don't care. Okay? They don't care. They're interested in our financial statements. They're not interested in how we arrive at all those numbers. Right? And so, you and I may have some discrepancies over perhaps a certain cost. You want to classify it as direct materials, and I want to classify it as indirect materials. There's a little bit of a gray area there with some things. It's not always simple. It's not always cut and dry with those, and you'll see some examples of that later on. So, but remember, these are not reports we're preparing according to any kind of rules or guidelines. We're doing what's best for us internally. Okay. All right. So far, so good. Questions? All right. Now, before we actually talk about, don't look up here, continue to look up here, I just wanted to move that over. So other examples of manufacturing costs, right, manufacturing overhead, would be anything else associated with your manufacturing process that's not direct materials and direct labor. For example, rent. If we are renting, let's say that I'm manufacturing tables in this room and I'm renting this space. Well, it's a cost that I need to incur if I want to be able to make my tables. I need a place to do it, right? And so I have to rent the space. It's not directly related to the product like materials and labor are, but it's necessary for production, okay? The other thing, utilities, right? Well, I'm not sure, especially if you're manufacturing and you're assembling things, I probably need electricity, right? And so the utilities that I pay so that the manufacturing process can actually take place is also a cost, a manufacturing cost. But it's not a direct material and it's not a direct labor cost, so therefore it must be manufacturing overhead, so it's indirect. Okay, so we have this very broad category, we have two subcategories, and then within those subcategories we have more detailed information. All right? But when you are looking at a list of costs, and the question might be, and the question is, tell me if this cost is direct or indirect, and the cost is utilities. Well, here you can look, you can see utilities is manufacturing overhead, which is an indirect cost. And if you want to be, real picky here, you can do that, right? And then these are like little 1s, 2s, 3s, and 4s, if you like outlines. I don't care. Utilities, what else? Depreciation of manufacturing equipment. Okay? depreciation of manufacturing equipment. That's another example. I ran out of room there, but there's more. Property taxes, if you own the property. Property taxes might be another example. Here's the key. Anything associated with the manufacturing process has to go on this side under manufacturing costs. Okay, so you with me so far? All right, so what are some examples of non-manufacturing costs? Well, you see them up there. Selling and administrative are my two subcategories. See, this is what takes place after I make my product, right? In my merchandising business, I bought my product already made. So what did I do with it then? I sold it, right? So I went directly to that non-manufacturing component because I wasn't making my own products. So I kind of have to, I'm adding a whole other dimension or element when I make my own product, right? We don't have any of this in a service business. We don't have any of this in a retail business. But that doesn't mean that we can't still apply the cost classification concepts that we're learning here. We would just have fewer classifications in a service business. We would have fewer classifications in a retail business, okay? So this is what happens after we make the product, right? So selling costs are those costs necessary to order and deliver the product. They can be direct or indirect, okay? Well, we don't really worry about that too much. Some examples might be sales person salary, marketing or advertising. Those are some very common examples of selling costs, okay? Administrative costs, some examples: executive, clerical, accounting would be in here. So if we're talking about expenses associated with the accounting department, those would be an administrative cost, all right? So again, we're looking at a list of things, and we got to plug them into their correct categories. All right, now, we have some other terms that we apply to these as well. And again, some of these we can use interchangeably. Just bear with me here. Another word for product, or another word for manufacturing cost is product cost. Okay? Another word is product cost. Product costs include direct materials, direct labor, manufacturing overhead. All right? So I like to do this up here. I just like to say product cost. And the reason that that's important is because these items here are first inventory items before we sell them. So they're actually assets at first. They become expenses later. Non-manufacturing costs are also called period costs. Okay? And those just include all selling and administrative. They're already expenses. They directly end up or land on the income statement. So just two more terms that you can use interchangeably for manufacturing and non-manufacturing: product versus period. So if we have an assignment that says, here's a list of 15 costs, tell me if they're product or period. You see, if you have this little chart, you'll be able to tell me if they're product or period, because your costs, so if I say accounting, well, here's accounting, it's administrative. Administrative is non-manufacturing, and non-manufacturing is period. So that's how we use this little flow chart to help us with our assignments. And before we can make any decisions, we have to be able to classify our costs, because we have to understand how they behave, otherwise known as increase or decrease, when certain things happen. Okay. So let's take a look real quick. It says, which of the following costs would be considered a period rather than a product cost? So it wants us to identify in that list, what's a period cost, what's a product cost? We might as well just do both. So A says manufacturing equipment depreciation. So they want to know which ones are period. What would A be? Well, I listed right here, depreciation, manufacturing equipment, right? That's an example of manufacturing overhead, yes? Manufacturing overhead is an indirect cost, and an indirect cost is a sub-account or is a manufacturing cost, which is a product cost. So that's not a period cost then, right? It's product. Do you see what I mean? That's how we're going to use this. Okay, so A would not get circled because it is a product cost. What about B? Property taxes on corporate headquarters. So corporate headquarters would be anything here under executive. Another word for that is just corporate whatever. So executives, corporate headquarters, that's going to be a period cost. Get the idea? Okay, so we would circle B. It is a period cost.
Even though it's property taxes.
Yes, because property taxes, you might have, listen, if you're making your own product, you probably have a building or a designated area for the manufacturing process, and you probably have a building or a designated area for your clerical, your executive offices, things like that. So they would be actually two separate categories, yes. What about, now that if that said property taxes in your manufacturing plant, then it would have been period, okay? That's the distinction there. What about letter C, direct materials cost? Product or period? Product, right here it is, right? Direct materials under product. Electrical costs to light the production facility. Product or period? Product, right? Because look, utilities, right? On this side. Product, production, another word for manufacturing. That's the other thing you have to get used to. When we say manufacturing, production, those mean the same thing, okay? And finally there, sales commissions. Product or period? Yeah, I wrote over here salesperson salary, but they could be paid a commission. What's the difference? Somebody tell me what the difference is between a salary and a commission. Yeah, commission is based on what you sell, right? A salary is just a flat rate you receive regardless of what you sell, right? If you sell 10 or 100, you make the same amount of money. The commission is based on number of units sold, right? Okay, do you guys have any questions about that? Are we good? Understand difference between product and period? Okay, so there's more. I know you're thinking, what? Okay, so manufacturing firms are often concerned with the costs that represent maybe like the greatest amount of their total cost. So if you had to, if you went through your checkbook and you looked at the expenses that you pay for an hour, you incur, and I were to ask you, what's your top 2 expenses, you'd go through and look, you'd add them up, and you'd tell me. It's kind of the same thing. A lot of times manufacturing firms want to focus in on those costs that are what they call prime or their highest costs. And usually it's direct materials and direct labor. Now, so when we add these up, we call these prime costs. Okay? So prime costs are just direct materials plus direct labor. What's happening, however, can anyone tell me, because 30 years ago, direct labor, probably 20 years ago, was probably a significant expense for most manufacturers. But what's happening as far as human labor is concerned? What are corporations, companies, manufacturers doing?
Turning to technology based.
Yeah, we're substituting now human labor with technology, right? Machines do it for us, right? I mean, there are many places you go now where you don't have anybody wait on you. You have your sheets, for example, right? You just go, I know people are preparing the food for the most part, but nobody's taking your order anymore, right? You're ordering off a little kiosk, and that has eliminated a job for somebody, right? The grocery stores where you scan your own grocery items, right? Notice what grocery stores don't have anymore either. There was a time when there was a person who would scan your items, and there was somebody, usually a young man at the end of the aisle doing what? Bagging those groceries for you. You don't see that anymore, right? Now the poor cashier has to do both jobs, or you can do it yourself. Now there are stores where you bag your own groceries, right? You have one up here in Evansburg, Aldi, right? Take your own, you can take your own bags, bag your own groceries. It eliminates a position. So that's why they say they're able to pay their people more, right? They don't have to hire as many people. They actually pay their people really well, just by the way. But now we have machines and robots doing things that people used to do. So I wouldn't, this direct labor, probably it might not be a prime cost for everybody anymore, okay? That shift may be moving down to indirect labor, where you have machines doing things for you. Conversion cost, the actual cost to take your materials and make them into a finished product. That takes really two efforts, and that is labor and overhead together. So we take, in order to make this material into a finished component, we have to take our direct labor and our manufacturing overhead, and we add them together, and we call that conversion costs. Okay, so make sure you know that. All right, those two terms. Now, there's one more classification or level of classification that we have to be concerned with. We have to decide if a cost is fixed or variable. First of all, I'll talk about mixed after we talk about fixed and variable. Cost will behave or react, that's another word for it, react. And when I say behave, I mean increase or decrease. Sometimes, not all the time, in response to changes in levels of production. For example, if I make 100 tables, right, then I'm going to need a certain amount of, I don't know what this is, some kind of fake wood, right? If I make 200 tables, I'm going to need more of that, aren't I? So what just happened to the cost of my fake wood? Because I made more tables. It just went up, right? I mean, that makes sense, right? If I make more of something, whatever the materials that I use that go into that product, the cost of that's going to increase, all right? But if I'm using this room the same amount of time every day, I got the lights on from 8 to 4, my electric bill isn't really going to change based on the number of tables that I make, right? So it's fixed, right? It's fixed. But my materials are variable because the cost of my materials will change in direct proportion to changes in levels of production. Let me say that again. My materials, the cost of my materials will go up or go down, right? Based on the number of units of something that I'm making. Therefore, materials varies. That's where the word, right? That's where we get variable. That means that my direct materials cost will vary in direct proportion to the number of units that I make. So if the number of units I make go up, so do my direct materials cost. So direct materials is typically a variable cost. That's what VC stands for, okay? Typically a variable cost. It will vary in direct proportion to changes in levels of production. If production goes up, my direct materials go up. If production goes down, my direct materials are going to go down. Does that make sense to everybody? Variable cost, vary. Use that word vary to help you. Now this is a really old example. This is so dated here, but they use an example here. A cost that varies in total in direct proportion to changes in levels of activity. Your total texting bill may be based on how many texts you send. We know that's not the case anymore, right? We all have what? Unlimited texting. So you can send 5,000 text messages and you're going to pay the same price as if you only send 500 text messages, right? But back in the day, do any of you remember when texting first, was an option? You did pay per text, right? And then your mom and dad might get your bill and they'd be freaking out because you went over your allotted number of texts and then you got charged like 10 cents a text for every, and that didn't usually go over well. Maybe you guys are even too young for that. I don't know. I don't remember when that all happened. So anyway, that's not the case anymore though, right? That's why we have unlimited texting for one flat rate, okay? But there are many things that, are based on our usage, right? Number of units, things like that. That's what a variable cost is, okay? Now, a variable cost per unit, however, will stay constant. So for example, if it's 5 cents per text, doesn't matter how many text messages you send, the per text cost is still 5 cents. What is changing in total is your total cost associated with that. So be careful because we have variable cost per unit and variable cost in total. Variable cost per unit will stay the same, but the variable cost in total will change, in direct proportion to changes in levels of activity. So the other thing here that's going to be a variable cost is direct labor, because the more of something I have to make, right, especially if I'm paying people to assemble it, the more labor I'm going to have to have in order to assemble those products. All right, so a fixed cost is something that doesn't change when levels of activity change. If you pay $600 a month rent at your manufacturing site, doesn't matter if you make 20 or 200 of whatever it is you make, your rent's going to be $600 a month. It's not going to change. So when we get down to manufacturing overhead costs, we have to look at each one individually. They can either be fixed or variable. They're going to be fixed or variable. Well, we're going to get into more of the fixed and variable thing, but there'll be more examples of that. But they're going to be fixed or variable. So it just depends. It just depends. Indirect materials and indirect labor are probably variable. Rent, property taxes, depreciation, all fixed. They're not going to change with changes in levels of production. When you're trying to determine if something is variable or fixed, you look at how it reacts to changes in levels of production. If it doesn't react when production changes, then it's fixed. If it does react, if it increases or decreases, then it's variable. We come over here to selling, okay? And same kind of goes, you got to look at each one. Selling can be fixed or variable. Administrative can be fixed or variable. You have to look at each cost individually in order to determine that. So when I talk about, the changes in levels of activity, what kind of activities am I talking about? Okay? I keep saying units produced, but that's not the only kind of activity that we might have to consider. All right? I was talking about a manufacturing firm, but there are other types of activities that may cause your costs to go up or go down. Okay? Depends what we're talking about. Units produced, I've been throwing that one around a lot. Machine hours. Some companies use machines heavily, and so the use of those machines is a driver of their costs. In other words, it causes their costs to be incurred. I mean, me driving 60, 70 miles a day to and from my home to here drives or causes me to have more gasoline expense, right? The more miles I drive, the more gas I need to put in my car. Make sense? So it's the miles driven that drive my gasoline expense. Make sense? Okay, so for a company that uses machines, maybe very little human labor, lots of machinery, the more those machines run, the more expense associated with that. Okay? Labor hours, we could use labor hours also. Okay? And we can also use miles driven, as I already gave you the example. So it's not a single activity. It's not always just units produced. A fixed cost, we kind of already talked about this, but here's an example. Fixed cost, if you've got an unlimited cell phone texting plan, right? Doesn't matter how many text messages you send. If you're not a fan of graphs, that's okay. You don't have to be. There's not a whole lot going on here. Number of minutes used within your monthly plan. So if you use 100 minutes or 4,000 minutes, your fee is still exactly the same. Anybody know what the average number of text messages you young people send a month? Just a little fun fact for the morning. Nobody wants to venture a guess? It's way too early for such questions. It's like something like 6,000. Yeah. I can, it's crazy. Okay. We're gonna kind of ignore this fixed cost per unit. It's really insignificant. Okay, it's insignificant, and that's kind of what they don't really tell you that here, but I'm going to tell you that. Fixed cost per unit, not really that important, okay? Later on in the semester, we kind of get into dividing up fixed costs even further. So this is just some terminology I need you to know. So fixed costs can either be what we call committed or discretionary. I'm going to give you an example. All right. So a committed fixed cost is something long-term that you never have control over. For example, my property taxes for my home that I pay to my county and my school districts every year. No matter what I do, I cannot change those unless I sell my house and move. That's the only way I can change that expense for me. I have absolutely zero control over the amount of property taxes that I'm assessed, right? That I'm assigned, that I have to pay every year. I have no control over that. Okay? Does that make sense? I don't get to determine, my behavior in no way, shape, or form affects how much property tax I pay. I can't shop around for property tax. Okay? That sounds silly, but you get the gist? I have no control over that. That is a committed long-term cost. The only way to change it is if I move and sell my house. A discretionary fixed cost, I may be able to change. Okay? For example, I recently changed my car insurance companies after I added, my son will be 18, so he's been driving for a little over a year and a half. And when I added him to my insurance after I recovered from fainting, and you know, the premium that you add for a boy, you boys are more expensive than girls, I'm sorry, about double, maybe a little bit more than double. I decided that I needed to shop around and try to find a better insurance premium. But when you buy insurance, you typically buy a policy that represents coverage for 1 year, right? So I may have to pay the premium for the year, but after 1 year, can I get out of that premium and go find another insurance policy that's less expensive? Sure I can. So I have options, right? Something may be fixed for the short term, but you do have ways of changing it in the long term. Okay, so those are the examples. So my insurance would be fixed for a certain period of time, but if I went and found new insurance, then that would change that, and I would have a new fixed cost every month. So maybe I go from $400 a month to $300 a month. It's still a fixed amount, right, per month. But I was able to shop around and find a different policy and lower my cost. Okay, but now I still have to pay for a 12-month period. Do you understand what I'm saying? So companies can do the same thing. They use advertising and research and development. And the reason advertising is a good example for a business is because advertising, you usually sign a contract, so you're usually locked in for like either 6 months or a year. So you may not be able to change that fixed cost in the short term for the next 12 months because you signed a contract. But after that contract is up, you say to yourself, I gotta go somewhere else. I gotta find another agency that'll provide me some advertising for a lower cost. I'm paying too much. You see what I mean? So some fixed costs you have zero control over. Some fixed costs you may be able to control in the long term. And that's the difference between committed and discretionary. Okay, let's see here. This is a little chart here that just talks about total cost and per unit cost. So I want to get to actually doing a little exercise here. So variable costs are going to increase in direct proportion, increase and decrease in proportion to changes in levels of activity. But the variable cost per unit won't change. And you'll see, it's much easier to understand when we're doing problems. Fixed costs in total, not affected. What I want you to do if you have your PowerPoints, put an X through this right here. Put an X through fixed cost per unit. We're not going to talk about it. All right, so let's talk about this one. Which of the following costs would be variable with respect to the number of cones sold at a Baskin Robbins shop? Okay, there may be more than one correct answer. So variable is going to do what? It's going to vary in direct proportion to what's the level of activity do you think at Baskin Robbins? What do they sell? Ice cream. So the level of activity here is probably the number of ice cream cones or ice cream dishes or whatever you want to call them, right? The amount of ice cream that you sell. So that's what we're talking about here, okay? All right, so what about the cost of lighting the store? If the store, let's assume that the store is open a certain amount of time every day, right? Doesn't matter how many ice cream cones are sold, right? The store is going to be open for the designated times that it's open. So what do you think the cost of lighting the store is? Fixed or variable? Fixed. I would say fixed, right? Because it's not dependent on how many ice cream cones are sold. That's what we're trying to decide. So here, my activity or my cost driver, what causes my cost, the amount of ice cream that I sell. What about B, the wages of the store manager? Fixed, okay? Now, somebody might argue, well, it says wages, and wages are typically an hourly thing, right? However, what is our cost object here? It's ice cream. We're not paying the manager based on the number of cones he sells, right? Okay, so yeah, I'm going to say his wages are fixed as well. The cost of ice cream, variable, because if you sell 10 cones today, right, that's going to be a different amount of the ice cream cost will be different than if you sell 1,000 cones today. Make sense? It varies depending on the number of units, in this case ice cream cones, right, that were sold. Cost of napkins for customers. Variable, why? Yeah, and of course then you have people like me that grab like 60 napkins, you know, like some little lady, shove them in my purse, and then I'm happy and I put them in my car. Like I couldn't have bought my own napkins or something. A lot of places now are actually, what does Subway do as far as napkins? They're stingy. Huh? I mean, it's still variable, but they give you one napkin, right? And if you ask for more, they're like, well, I don't know. Yeah, because people abuse that, right? When they have those little canisters with the napkins in it, you can just take your own. Totally get abused, right? I'm guilty. All right, so any questions on variable and fixed for this example? So with each example, the object that you're evaluating is going to change. It's going to be different. In this example was ice cream, okay? We went from an automobile to an ice cream cone. So that can vary. All right, so we already got answers here. All right, so a mixed cost, what do you think a mixed cost is? A mixed cost is going to be a cost that has elements of both fixed and variable. But I don't want to get into the details of that today. So I am going to switch over to a little exercise here we're going to do together. So if you don't have a book, that's okay. Don't panic, it's only day 2. But we're going to do this together. All right. So there are a couple different exercises. I'm going to just, oh, you can't see that. I'm just going to pick a couple random ones here. There's going to be a larger exercise I'm going to have you guys do for me as an assignment. You guys will be able to work together on it. But for right now, let's just kind of get our feet wet. If you have this in front of you, this is going to be helpful because this really addresses any classification, any question about cost classification that you may be asked. All right? Okay, so I want to look at exercise 2.2, and you can see I have actually answers written down there, but the PC Works assembles custom computers. So again, when you're looking at doing assignments like this, make sure that in your head you identify the object for which you're trying to classify costs, because every object's different, okay? Custom computers from components supplied by various manufacturers. The company is very small, and its assembly shop and retail sales store are housed in a single facility. That's important. Okay, that actually goes back to what you asked me earlier. You have one facility, but within that facility, there's a manufacturing place or section where those things are put together. Then there's actually a store where then they're sold. Okay, that's going to be necessary to understand a little later. Listed below are some of the costs that are incurred at the company. So we've got 1 through 8. We'll talk about them in a minute. It says for each cost, indicate whether it would most likely be classified as. Now in this problem, they want us to say, is it direct labor, direct materials, manufacturing overhead, selling, or administrative? So here we just really need to know the definition of those terms. This might not be as helpful in this problem because it's not asking us to tell, is it a direct cost, is it a manufacturing cost, is it an indirect cost, is it product or period, okay? Just direct labor, direct materials, manufacturing overhead, selling, or admin. Number 1 says the cost of a hard drive installed in a computer. And what do these people make? We've got to identify our cost object. What is the object for which we're trying to classify costs? What's it say in the first sentence? What do they make? Or what do they assemble?
Computers.
Computers. So what's our cost object? It's a computer. How about that? Does that help? It's computers, right? So we're talking about a computer. So what do you think the hard drive of the computer would be classified as? Materials, direct materials. Right, because doesn't the hard drive, even if you don't know a whole lot about computers, and trust me, I don't, doesn't the hard drive, though, become an important part of a computer? Yes, even I know that, right? So that is an integral component. Remember the definition of direct material, something that becomes an integral or an important, a main part. Use the word main there, a main part of the finished product. So number 1 is direct materials. You can see my very light pencil mark here, DEM, direct materials. Okay? Number 2, the cost of advertising in the Puget Sound computer user newspaper. That sounds like an exciting piece of reading. Huh. So what's the cost of advertising? Okay, if you're not sure, Didn't I write advertising somewhere over here? Where did I write it? I wrote it under selling. So is that what, right, we're trying to decide, right? They're selling, that's a category, right? So advertising would be a selling cost. Get the hang of this? Number 3, the wages of employees who assemble computers. Direct labor, yes, because those people actually have to do what to the computer? They have to touch it, right? Anybody that's touching that object, it's going to be direct labor. Think of it that way. You with me so far? Okay. Number 4, sales commissions paid to the company's salespeople. Well, I have it written right here, and it's under what? Selling. See how easy this is? Even at 8:52. Poor things. Okay. Number 5, the wages of the assembly shop's supervisor. The supervisor is the person walking around making sure people are doing what they're supposed to be doing, right? So how would you like to classify that? So I would call that indirect labor, right? Because those people aren't actually touching, they're not assembling the computer, right? They're just making sure you're doing it right. So the supervisor is going to be manufacturing overhead. Okay, right? Manufacturing overhead. MOH for short. I love abbreviations in here. There's lots of long, big, long words. So manufacturing overhead, we're going to say MOH. Okay. Does that make sense? Anybody not clear on that? Number 6, the wages of the company's accountant. Where did I tell you accounting expenses would go? Under administrative, right? Number 7, depreciation on equipment used to test assembled computers before releasing them to customers. Depreciation on equipment used to assemble the computers. Manufacturing overhead, right, look, depreciation of the manufacturing equipment, that's what that is. Manufacturing overhead. You guys with me? Okay. And last, okay, this is interesting here. Number 8, rent on the facility. Now, I stressed something at the beginning when I read the information for the exercise related to the facility. What did I stress? That both the assembly shop, where the manufacturing happens, and the retail store, where the selling happens, are in the same facility. So the manufacturing and the non-manufacturing are taking place in one building. So how do I divvy up the rent? Because look, I have rent here, right? And actually, I would have rent over here too. I would actually have depreciation over here too. So this is a great place for me to introduce this. I actually might have property taxes over here as well. But this is the manufacturing facility. This is the shop where you sell it, right? The retail store where you're selling things out of. So what do I do with that one? And if you look at my little answer here, I got all kinds of stuff written down. So what's the answer? What do you think? Remember, these rules are not rules that are written in stone, so to speak, like generally accepted accounting principles. You can have different opinions about these classifications, and if you can back up your opinion, it's not wrong. And it may be different from someone else. There may be more than one answer for some of these. So what are your thoughts on this last one? Rent on the facility. Knowing that the facility has both manufacturing and non-manufacturing in it. How would I address that? I'm going to have multiple classifications, exactly. Okay? So, if my facility, this sometimes helps, and I'm certainly no artist, but this is my facility, okay? And this part is where I assemble. And this is where I sell, or I sell. My sales come out of here. What would be the most appropriate way? And my total rent, let's say, for example, it just says rent. Let's just say that my total rent is $10,000 a month. How do I distribute that $10,000? Because this would be manufacturing overhead, right? And this might be selling. It might be, and if we had, let's just say we had offices, administrative offices too. This might be then admin, right? Maybe I gotta split it up 3 ways. How do I split this 10,000 up so that I can classify that cost accordingly? Any ideas? I drew that for a reason, not to display my artistic skills or anything like that, but come on, think. How do I distribute the 10,000 to these various areas?
Divided by floor space.
Floor space, square feet. Excellent. Right? I need to know the total square footage of the facility. Then I would need to know the square feet of each of these sections, right? And then the percentages I would multiply by 10,000 and I would give an amount that was appropriate to each of those classifications. Very good. Excellent. Okay. Questions? Anyone? All right. So this is one more. I'm just prepping you for a graded assignment here. So we got about 10 minutes left. Let's talk about this. It says exercise 2-3 classification of costs as just product or period. So look, all I'm looking for is this now. Product, period. Okay? Product or period. Very broad classifications for this one. Suppose you've been given a summer job as an intern at Isaac Aircams, a company that manufactures sophisticated spy cameras for remote-controlled military reconnaissance aircraft. Jeez. The company, which is privately owned, has approached a bank for a loan to help it finance its growth. The bank requires financial statements before approving such a loan. You've been asked to help prepare the financial statements and were given the following list of costs. So it goes on to say at the bottom, classify the above costs as product or period for the purpose of preparing financial statements for the bank. We are going to get to financial statements at the end of this chapter, and we're going to talk about which accounts, because some of these accounts actually end up on our income statement. So even though we're preparing reports for ourselves internally, some of the data that we're using to do that is also data we would use to prepare reports for external users. So you're going to the bank, you want a loan, the bank wants to see your financial statements. All right, so product period, let's take a look. What's the object here though? Can somebody tell me what's the object that we're trying to assign costs for? What do these people make? Spy cameras, exactly. So the object here is a spy camera, all right? Number 1, depreciation on salesperson's cars. Product or period? Broad category here. What do you think? Product. No? Period? What? Depreciation on whose car? Salespeople. And where are salespeople at? Under selling. And selling is a period cost. See how you talk yourself through this? So next to depreciation on salesperson car, look. Selling, look, salesperson, right? I only wrote commission here, but if they have a car, right? Another example of a cost that would be underselling because it's associated with the salesperson. That is a period cost. Number 2, rent on equipment used in the what? Keyword, factory. So is that product or period? Product, right? Manufacturing overhead, production, factory. All of those words really refer to the same thing, and that's production. Number 3, lubricants used for machine maintenance. Okay, it is product because, and if we want to get a little bit more detail here just so you understand why people said product right away, lubricant used for machine maintenance would be an indirect material, right? Machines, as far as this example goes, is the machines that's making these spy cameras, right? And so obviously we look up and that's a product cost. Number 4, the salaries of personnel who work in the finished goods warehouse. Well, if something is finished, it's no longer being manufactured. So where do you suppose that would be? That's actually, this could go a couple of different ways. Let me say that. Finished goods warehouse. What do you think? Okay, it could be selling because it's ready to sell, right? Okay. Do you have any other arguments for that? See, in this particular example, we might need to know more details. We might need to know that where is that finished goods warehouse? Is that finished goods warehouse actually a place in the manufacturing part where that just hasn't been moved to the store yet? So we don't know that, right? So actually that answer, you could go a couple of different ways with that answer. My initial response would be selling, and so period, but you could argue product, okay? You could argue product. Number 5, soap and paper towels used by factory workers. That is product, because look, I don't have that listed here, right? That's not direct materials, it's not direct labor. I mean, we could call it indirect materials, right? But what's the key word there? Who's it used by? Factory workers. And anything associated with a factory, production, is on this side, manufacturing. Number 6, factory supervisors' salaries. Factory product. Again, keyword there, factory. Supervisors' salaries would be an example of indirect labor, right? So that's going to be a product cost. You have to do this on a test. So make sure you're not understanding what these classifications are that you're asking. Number 7, heat, water, and power consumed in the factory product. That would be just utilities, right? Right. Number 8, materials used for boxing products for shipment overseas. Units are not normally boxed. In other words, they're not boxed as part of the way they sit on the shelf. What do you think? Materials used for boxing products for shipment. If they're normally not boxed, so boxing this, whatever, these spy cameras is not a part of completing the manufacturing process. You're just putting it in a box to send it somewhere. I would say that this is over here, because I can add shipping to selling as part of, see how we add some things to this as we go? So for that one, if you said product, the only reason I would argue not is because of what this says right here. Units are not normally boxed. If putting something in a box is the way that you always present it, then it is a period cost. But this little note here kind of changes that, okay? Number 9, advertising costs, product or period. Oh, Zach, yes, I'm sorry.
I had a question for the last one.
Mhm.
Couldn't it be like product too, because it's not really something that is used in the main product, like it's like a napkin or something used in like a store, like because the boxes are kind of just materials that are just.
But you have to think about the purpose for which the box is being used. It's being used specifically to ship something. So to me, that says it's associated with selling the product. That's all. That's just how I rationalize that one. I'm not saying you can't rationalize it like you just did. This thing, in that case, that period might be the better answer. Not that you couldn't rationalize the product could be. Yeah, that's the thing with some of these. Okay. All right, what about advertising costs? Product or period? Period. That's pretty straightforward, right? Number 10, workers' compensation insurance for factory employees. Product. What is workers' compensation insurance?
Someone gets hurt on the job.
You get hurt on the job, right? What do you call the insurance that you might utilize when you get hurt at home, but you can't go to work? That's not workers' comp, right? And that's a crime if you try to say that you got hurt at work, but you didn't. You fell down the steps at your house, and anyway. What do we call that insurance that you might utilize if you get hurt at home and you can't go to work? Not unemployment. Unemployment is if your employer says they don't have enough work for you to do, so they tell you not to come to work for a while. How about disability, right? Disability insurance. So people kind of sometimes confuse workers' comp and disability. They're not the same. Okay, that's just a little another tidbit there. Where are we at? We said product, right? Number 11, depreciation on chairs and tables in the factory lunchroom. Product, yes. I keep stressing factory, so that's like a big giveaway, right? Number 12, the wages of the receptionist in the administrative offices. Period. Yeah, you guys are getting it. All right, we got a couple more with like 2 minutes left here. The cost of leasing the corporate jet used by the company's executives. Period. Yep. Number 14, the cost of renting rooms at a Florida resort for the annual sales conference. Period. See, anything associated with selling, right? And lastly, Here we go, Zach. The cost of packaging the company's product. Product, right? Product, all right? Okay, so what I want you to take a look at for Tuesday, because we're going to have a discussion and I am going to collect it. You'll get a chance to correct it. Just talk to your friends about it. Problem 221, 2-21, on page 62. Tuesday of next week. I'll give you about 10 minutes at the beginning of class, so take a look at that before you come to class, and I'll let you have an opportunity to talk to your neighbors there about that. All right, you guys have a great weekend. Hope you're having a good first week. See you next week.